Ever seen the term ad valorem pop up on a tax document and just kind of stare at it? Yeah, you're definitely not alone. Let's break down this scary sounding Latin phrase and make it super, super simple. It's a story a lot of us homeowners know, right? That letter arrives with your new property assessment and, hey, your home's value went up. Great. But then the property tax bill shows up and it's higher too. That is not a coincidence, my friend. That direct link, that relationship between the value and the tax, is the whole idea of ad valorem. Okay, so let's tackle this thing head on. This scary Latin term. I promise you, it sounds way more complicated and intimidating than it actually is. In fact, the idea behind it is something you probably already understand perfectly. And that's it. That's the big secret. Ad valorem is just old school Latin for according to value. It's just a fancy name for any tax where the amount you pay is based directly on the value of whatever's being taxed. And the number one most common example in our lives is our property tax. The logic is actually really straightforward. If your property gets assessed at a higher value, you're going to pay more tax. If its value drops, well, your tax bill should drop too. The tax literally follows the value. Now, to make this idea really stick, let's use a super simple analogy. Let's forget about taxes for just a second and think about going out to eat at a buffet. So, picture it. You've got two options. Option one is a fixed price. Let's say it's $20 and you can eat whatever you want, pile your plate to the ceiling. That is not ad valorem. But then you've got option two. Maybe it's a salad bar where you pay by the weight of your plate. The more food you stack on, the more value you put on that plate, the more you pay. That is a perfect ad valorem system. And that's really the heart of it, you know? Property tax is basically the pay-by-weight version of taxes. The more weight or value your property carries, the bigger the bill. So how does this whole according to value concept actually get crunched into the numbers you see on your tax bill? Well, the math is probably way more straightforward than you'd think. At its core, the calculation is pretty simple. They take your property's assessed value and they multiply it by a tax rate that's set by your local government. But what exactly is that rate? That rate is often talked about as a mill rate or sometimes millage. It sounds super technical, I know, but it's really not. 1 mill is simply $1 of tax for every single $1,000 of assessed value. It's just a way of breaking the tax rate down into a smaller, easier to manage number. Let's just walk through a quick example together. Okay, say your home is assessed at $250,000 and your local mill rate is 20. First step, multiply 250,000 by 20. That gives you 5 million. Now don't panic. Remember, a mill is based on $1,000 of value. So you just take that big 5 million and divide it by 1,000. And there you have it. Your property tax is $5,000. See? Not so scary. And here's the really crucial takeaway from all that math. Your local government could keep that mill rate of 20 exactly the same year after year. But if your property's assessed value goes up, well, your tax bill will still go up. That's the according to value principle in action. All right, listen up, especially if you happen to be studying for a real estate exam. This next part is for you. There is a very common trap that all hinges on understanding what ad valorem means, and just as important, what it doesn't mean. So on one side, you have our friend, the ad valorem tax. We know it, we get it, it's based on value. But on the other side, you'll see this thing called a special assessment. So what in the world is that one based on? And this is the key distinction. A special assessment is usually not based on your property's value. Instead, it's based on a specific benefit or service you're getting. Think new streetlights for your neighborhood, or maybe landscaping in a common area. It's really more of a fee for a service, not a tax on what your house is worth. So when you're in that exam, these are your trigger words. If you see phrases like according to value, or based on assessed value, or millage rate, your brain should just light up and go ad valorem. These are the absolute telltale signs. Okay, we've covered a fair bit of ground, so let's just boil this all down into a final, simple cheat sheet with the absolute must-know takeaways. Here it is, just 4 key points. Number 1, ad valorem means according to value. Easy. 2, property tax is the classic example of an ad valorem tax. 3, millage is just the tax per $1,000 of value. And 4, the one to watch out for, special assessments are usually not based on value, they're based on a service. So I'll just leave you with this one question, a little self-test for exam day. The next time you see the words special assessment, what's your first instinct going to be? Are you going to treat it just like a normal property tax, or
are you going to pause for a second and ask yourself that critical question. Hang on, is this actually based on value? Getting that right is the whole ballgame.